Welcome to the Transparent FX Academy. In this video, I'll speak about USDCAD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside quite strong monthly demand and support. In fact, what we can notice is that at the moment this market is at a higher low area. Usually when you see the market which is constantly creating higher lows, and in this case it is creating higher lows respecting this monthly trend line, what you would expect is to see more institutional buying around this zone. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market just created a new higher low at this trend line, which is exactly what you would expect in a situation like this. We can also notice, however, that the market does have and is currently facing some minor resistance around this zone. Why do I say minor? Because the market hasn't really entered the area yet. Usually, as you can see also right here, when the market is testing such areas of resistance, you expect a deep test of the zone, which means that there is definitely space for some more bullish price action to be created for the market to go and test what kind of liquidity there is inside of this zone. Let's keep all of this in mind and drop down on the weekly time frame. From a weekly perspective, the situation is very clear. We can notice here how we had two changes in the overall trend of the market from a weekly standpoint. We can notice how the market first was in an uptrend, creating weekly higher highs and higher lows. Then the market shifted to a downtrend, creating lower lows and lower highs. And here what we had was the creation of this triple bottom. The market tried 3 times to create a lower low. However, it failed, and now the market is pushing to the upside, creating a new weekly higher high. So this is a textbook shift of structure from a weekly standpoint, from a weekly bearish market to a weekly bullish market. And in this case, the reversal pattern was this triple bottom, which is a quite popular pattern. It happens many times that the market tries multiple times to go lower. It fails every single time. And at that point, buyers take control of the market and you see the push to the upside. So from a weekly standpoint as well, everything looks quite bullish. We can also notice the break of structure here with in which we can identify the horizontal structure being exactly this zone here, which was acting as previous weekly support, turned resistance here, here, and here. And now the market has broken it to the upside, which means that all this previous resistance is now turned support. And the next logical step would be for the market to create a retest of this previous weekly resistance turned support, because as we know in the market, previous resistance, once it is broken to the upside, is acting as support. And at that point, what you would expect is the continuation to the upside and the completion of this weekly impulse correction, an impulse pattern to the upside. Let's drop down on the daily time frame and see what we have. Now, from a daily perspective, the situation is quite clear. We had a massive impulse to the upside, and this impulse to the upside broke above the previous weekly, and in this case also daily structure, because as we have already identified this area here in the weekly, we can notice that also on the daily time frame, this area is being respected quite precisely. It was respected as previous resistance here, and now the market has broken it to the upside. So all this previous resistance is now turned support. And the next logical step would be for the market here to go and retest this previous resistance turned support and then reject it to the upside. Now, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg, which shows us how we have a 0.32 retracement exactly at this zone, meaning that we have a good probability, since this is a confluence of support and demand area, because we have both the 0.32 and the horizontal structure both lining up at the same area. This area being a confluence of support means that we have an increased probability of seeing institutional longing inside of this zone. Speaking about institutional positioning, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data for the CAD, the first thing that we have to keep in mind is that if we are looking at data on the CAD, we are already looking at CAD USD, because all currencies on the spot are traded against the USD. But since we want information on USDCAD, we simply have to reverse everything. And looking at the data on the CAD means that if, for example, institutions are shorting the CAD, it means that they're expecting USDCAD to go higher, because by shorting the CAD, they are actually longing USDCAD. And we can see that even though with the very last few reports, we see that net positions got slightly increased, if we look at what is actually going on, net positions are getting decreased. We went from minus 53k net positions down to minus 70k net positions. We can see how shorts from an institutional perspective on the CAD went from 78k up to 93k. So institutions have increased their shorts on the CAD, meaning that, as I just explained, by shorting the CAD, they are longing USD CAD, because all currencies on the spot are traded against the USD. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, as we have this impulse and potentially a correction back to this confluence of support area, what would I expect? Well, as I said previously, in a confluence of support zone, there is an increased probability of seeing even more institutional longing of USD CAD, so shorting of the CAD. So in a situation like this, what I would expect is that, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.